FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. As we continue our Trading with a Purpose series, we're now taking a look at gold. So gold is coming off a peak formation low. It's still coming off that peak formation low all the way back from April 7th. Obviously still looking for buys. This has not changed the outlook on gold for us. So until something drastic happens with tariffs and the market sentiment and everything like that, it's not going to change. All right, we're always looking long term. We're always looking for buys on gold right now. Okay, so just keep that in mind. Yes, we're going to have these retracements. Sometimes these retracements are going to be good in the sense of they're going to be good enough to give us a reset. Other times they may be good enough to give us a full cycle, which is perfectly fine. It's much needed, but at the end of the day, we're looking for buys no matter what, almost, unless we get a deep pullback like this. But even on deep pullbacks, I'm more looking at, okay, when are we able to go ahead and start looking for buys again? All right, so obviously we're in a super cycle on this one as well. We don't have any evidence yet of a peak formation high forming. For any of that to be possible, we would need to be trading like below 3260. Okay, so if we're not trading below 3260, then we're still looking for buys, and there is no evidence yet of a peak formation. There was pretty decent evidence here around this area for a peak formation high, but we never got any of the confirmations that we look for a peak formation high. So regardless, we still kept looking for buys. Now, the question is, this thing has been on a rip since April 7th, April 8th. How many setups essentially would have met our rules to essentially look for buy setups along this entire stretch that we've been going here? So we basically start off on Wednesday the 9th, because that's when we actually got everything we needed, all the confirmations, crossovers, and everything like that. So on Wednesday the 9th, there's nothing to trade here on a London session. Even into, let's say, the US session, again, there's nothing to trade here that would have met any of the requirements that we would look for buy setups. So essentially we just go to the next day and see, are there any setups on was it Thursday? So Thursday, you could see here that there is essentially there's a type 3 setup here on Thursday that would have met all of our rules. You can see price action comes back from the top of the range, goes right to the middle, bounces off the 50. Now we don't get an actual pattern to trade here. So we're basically going off a close of the 13 EMA, which is this candle here. So the setup itself would be on the next candle. You get a slight pullback. That is your entry. And then from there, you're essentially getting a 4-to-1 risk to reward ratio on this particular trade. New York session, there's nothing there to trade for me. The very next day on a Friday, there's nothing here that met any of our trade setups that we would normally trade. There could have been a possibility of an opportunity in the US session. This is really, really early, and it would have been basically like a continuation trade. But again, the setup itself, happened right outside of the box. And again, you would have needed to pay really close attention at the very beginning of the session. You had a good pullback from towards the end of the London session going into the beginning of the US session, and you were right in the right area. But it was just right outside of the box itself. If you were like super risky or you just wanted to take the trade, then for me it would have been obviously the star pattern here with a pullback on the next candle that would have been inside of the box, and then you're looking at essentially a 3-to-1 trade on that one. For me, if I can get this exact setup, but literally like a little bit later, like 8:45, 9 o'clock or so, that would be ideal. So here on Monday of the following week, again, still looking for buys. We don't get anything at all from a buy perspective. to look for a trade at all. So there's nothing here to trade on Monday. Tuesday, the very next day, a lot of people could have taken this as a type 3 setup. This would have ended up being a loss. The trade setup would have looked something like this, that you were going for essentially a 2-to-1. The trade setup would have looked something like this. You don't get a pattern here to trade. So essentially you're going off of a close above the 13 EMA, and then you get a slight pullback on the next candle. So that would have been the entry here. Your stop loss obviously goes below the low of that candle that you're entering. And then from there, you're just going 2-to-1. This one would have been a loss. Okay. Now, going by the 6 candle rule that we have, if you enter in on this blue candle here, on the very beginning of that blue candle, you just count the candles. 1, 2, 3, 4, 5, 6. 6 is right here. Okay, this candle, this doji candle right here. There's your 6 candles. You got to ask yourself, am I in significant profit at all? If you're not in significant profit, then you would just take yourself out of the trade. Okay. If you would have taken yourself out of the trade, essentially it's like a break-even trade. It would have been something positive, which is good, but still more like a break-even trade. You just get out of the trade because you're not in significant profit, and you should be in significant profit after you get into the trade within 90 minutes or so. As far as the US session, there's nothing there that's tradable for me. Now, there is something tradable here on Wednesday here. If we look, you have a real aggressive move coming out of Asia, and then basically you get a pullback. That pullback goes to the very top of the range. That is essentially a type 4 pattern. Basically, the next candle you get is a really big bullish candle, which is great. But the way that this trade works out, the possibilities for this trade is the fact that you get a pullback on the very next candle. And I think with that pullback makes this trade viable, because if you don't have that pullback, essentially you don't have a viable like 2-to-1 trade or whatnot. Now, obviously this one would have been fine. 2-to-1 you would have gotten it towards the end of the US session, but if you would have held it and kept going, this easily could have turned into a 3-to-1 trade. Now we get into Thursday. There is a type 2 pattern here as well that you could trade. You get a pullback. You get a second leg star pattern here. That is something that's tradable. And then you're basically, again, going 2-to-1. I mean, this one almost goes 2-to-1. So again, depending on where you are, if you're paying attention to this, you probably would have gotten out of this trade after 90 minutes if you're not in significant profit, because 6 candles in, you're probably like right here, I believe. Again, and you have the 50 EMA and everything like that that's right against you. So those are factors that you have to consider. But if you've held it, this would have basically been a loss by, if you didn't take profit obviously on this trade, because it went maybe 1.84 to 1 risk to reward ratio. So we're talking right at about close to 2 times ADR. But again, if you're not paying attention to this, if you just have the set and forget it type of deal, then eventually this would have ended up being a loss for you. And so essentially that's where we are. So we're looking at, potentially 1, 2 trades, 2, 3 trades, depending on whether or not you took this one. 2 trades for sure that would have been about 4-to-1, 2 or 3-to-1. And then this one right here, to me, would have been a break even. This one could have been a loss, essentially. So there is essentially all of the trades that would have been available on this particular pair. Now with gold, I stress to you guys very simply, you could literally just, every time it dips, you can literally just buy it and hold it as an investment. don't buy it as a pair with leverage on it, but literally buy it as an investment. So buy like the gold ETF or something like that. Every time that it dips, buy it and then just hold it. In the times that we are in right now with all the tariffs and all the uncertainty and stuff, you best believe this is going to continue to go up and rise. All right. When people are scared about what's happening in the market, they take all their money away from risky assets and then they put it into gold. Again, this is probably just going to continue to go higher. Every time it dips, buy, hold, buy, hold. You'll probably do better just by buying and holding than trying to simply trade it, especially with leverage. All right. So that's your recap on gold. Still coming off that peak formation low, still looking for buys. Again, in order to get a peak formation to form out of this, I believe we have to be trading below around 32.60. If we're not trading below that, I would still look for buys. We're going to have the retracements. We just have a retracement right now, right? You could see that. But as soon as we hit to that 50, you could see it just bounces off the 50. So, I mean, until something changes, guys, we're still looking for buys. All right. So hopefully you got something out of this video. Let me know in the comments, were you able to take any of these trades on gold, and let me know which ones. All right. Until the next one, we'll cover on the next video, we'll cover pound JPY, and then we'll finish off with NAS 100.